Master your money, free your future. Welcome to Budget for Life. My name's Jeremy. I'm not a professional YouTuber, as you can see very plain and clearly, but I am a financial advisor. However, this video is not financial advice. In this video, I want to talk about Ryan Cohen's new 13D that was just published yesterday on January 20th after hours. Some huge implications for GameStop stock and Ryan Cohen's comp plan and the company. Let's get into it. Two things before I get into it. One, of course, just want to say thank you to those who have joined the channel as fans and friends. I do appreciate it, and congratulations on the additional perks and insights that you get from that. The second thing I want to say is Budget for Life Infinity Pool update. So November's payment has been DRS'd. So there we've got the 56 shares locked up and just received payment for December. Was able to buy 29 shares. So there's the payment, $610. And there is the purchase. Sorry if I'm covering it up. I think you can see it all. On Fidelity, once that settles, I will be able to DRS that as well. So altogether, we have locked up together, you and I, within Budget for Life Infinity Pool, 85 shares of GME. Everyone wants to talk about the 85 bears, but I'm here to talk about the 85 shares. Okay, and we're in the green, up 2%, $35 of gains. Way to go, squad. So just want to say thank you for the support. 100% of all the earnings of this channel do go to DRS Book GME shares. It's about aligned interests, right? A YouTube channel that aligns its interests with its viewers. What a concept. Okay. We also had, to get into the content here, another director purchased 12,000 shares. Great sign. Warren Buffett says that insiders sell for lots of reasons, but they only buy for one. So insiders at GameStop think that GameStop is very attractive as an investment opportunity right now, increasing his total share count to 584,000 shares. But let's get into Ryan Cohen's, because there's a couple things we learned. On the surface, or at least initially, we learned that he bought 500,000 more shares, $10.5 million more, to increase his total stake to 37.8 million shares of GameStop, all purchased with his own money, zero coming from compensation, because he has not received any compensation. This is the same amount that he typically has invested when he makes another stock purchase, kind of around that $10 million range, since his initial kind of leg into the company. One reason this is bullish, though, is historically Ryan Cohen has very effectively timed the bottoms of GameStop. So usually his share purchases come in at relative historic lows or cycle lows. And so a lot of these dips are where his 13D filings have come in, and shares have often appreciated post his filings meaningfully. So certainly bullish that he filed a 13D, because it kind of means, okay, 2026 and really Q1 is off to probably a great start. I was of the opinion coming into this year that we might not see, we might see a big late January rally just related to kind of the 5-year expiry since the sneeze in January of 2021. But apart from kind of technicals saying maybe we'll pop, or maybe GameStop shares will pop in the first half of the year, from a fundamental perspective, I don't think we will see power packs numbers and cash deployment until at the earliest, probably the Q2 filing, which would come in June. So I was thinking fundamentally we might not see shares appreciate substantially until June and beyond this year, although I do anticipate great anticipation throughout the year. This isn't about me, though. This is about Ryan Cohen. And all I'm saying is the fact that he made a purchase, at least on a historic trends perspective, would signal, hey, GameStop shares might rally from current levels. A couple other things I want to get into, and it relates to his comp plan because I have speculated that this comp plan, right, allows him, well, it does allow him to purchase 171 million additional shares of GameStop at 2066. I made a whole video about it, right? One question was, why wouldn't he just buy the shares right now, right? Why would he do this through compensation if he really wanted to buy this many shares at this price point, why didn't he just do it? Well, Ryan Cohen's 13D filing that he just made is basically confirmation that he can't, right? He just spent $10 million on shares and the stock is up 3% from where he bought the shares at. This comp plan allows him to spend $3.5 billion on shares. In other words, the only way that Ryan Cohen can secure his opportunity to spend that much of his net worth on GameStop shares is through stock options through the company, right? It's just such a huge bullish swing, a huge insider buy that Ryan Cohen just can't do that on the open market. This 13D filing confirms as much. Just $10 million, it's a 3% swing. He's wanting to do what's 350 times that? He's wanting to buy 350 times the amount that he just bought. Okay. Another thing that I have speculated as it relates to his comp is that he is interested in buying the shares with cash. That it will raise $3.5 billion for GameStop. Now, it's possible that he doesn't, as Tony Rigatoni Dinero said in the comments. What's up, Tony? He's saying, hey, option awards are going to happen net settlement. Almost nil chance that Cohen will pay cash to exercise. Almost a nil chance that Cohen pays the $3.5 billion to GameStop. Tony thinks it's more likely Ryan Cohen will just take the net, right? Whatever it would have cost me, just give me in awards of stock the difference between the market price and my option price, and I'll just take that lower amount of shares. I think this 13D gives us a couple clues that it's greater than a nil chance. Okay, and there's one that's old, one that's new as far as information goes. The old piece of information is that these shares that are owned by Cohen may, at any given time, include margin loans made by brokerage firms. So Tony's big point was, hey, as a concentration of Cohen's net worth, $3.5 billion is just going to expose him so substantially to GameStop risks. There's almost no chance that he would want to concentrate his net worth so much within GameStop. Well, his net worth is $7 billion right now, and less than $1 billion of that is his total GameStop plus GameStop warrant ownership. So he has $6 billion of net worth attributable to his other publicly owned holdings or publicly known investment holdings. And this comp plan is going to take several years to fully vest. So that 6 or 7, right, really 7 billion, including his GameStop portion, what is the value of that going to be in 5 years? Well, probably if he just does what the stock market index does, even if his investments don't outperform, that 7 will probably be at least 12. If he has 12 billion in net worth, is it plausible that he would want to own 3.5 billion of GameStop, or to spend 3.5 billion on GameStop? Well, here's the thing. Ryan Cohen is very open to taking margin loans. So why wouldn't he doesn't have to sell out of 25% of his portfolio and then buy GameStop shares with it. He can borrow against 25% of his portfolio and buy GameStop shares with it. right? And if the GameStop shares he's buying are automatically deeply in the money, which would be the case by necessity related to these market cap hurdles, right? And the share price that he'll be able to purchase them at. If he ever wanted to liquidate any amount of that, he could. But I think it's very likely he'd say, hey, I'm fine borrowing against my net worth to purchase GameStop. I don't have to sell out of real estate. I don't have to sell Apple. I don't have to sell Wells Fargo. I don't have to sell all my Chewy stock or Netflix stock or whatever, Alibaba stock, all the things that he holds. He can just say, I'm just going to borrow against 10 or 20% of that to increase my position in GameStop, which will still, when it's all said and done, only total at 30 or 40% of his net worth, which to me is not anywhere close to a hyper concentration risk that would be concerning for Cohen given his entrepreneurial nature. So this his ability to borrow against his massive net worth and holdings via his brokerages, I think is a key clue that Ryan Cohen very well may be interested in purchasing 171 million shares, right, for 3.5 billion, which and sending 3.5 billion to GameStop's balance sheet. I think it's very plausible for that reason. I think it's very plausible for the stock reaction reason, right? 1/350th of the purchase price already moves the stock 3%. Right. So I think it's very plausible that Cohen would say, I really want to spend this money, but I need it to happen through a stock option comp vesting plan. It's not going to be able to happen purely on the open market because the price of GameStop will appreciate way too much before I can fully invest the 3.5 billion I'm interested in increasing my ownership by. The other thing that we learned, the new piece of information, is that Ryan Cohen has not sold any of his warrants. He holds them all. He has not sold even or exercised even a little portion of his warrants. He holds the warrants that he received when the warrants were issued during Q4 of 2025. What does that mean? It's another signal that he is interested in owning more shares of GameStop. If he wanted to, he could have received this warrant distribution and sold them right away for $3 a warrant, and he would have just raised for himself $10 million, which he then could have just used to fund his purchase, right? But he's holding his warrants, and the fact that he's still holding them would indicate that he's interested in the near-term appreciation of GameStop within the next 10 months, and likely that he's interested in exercising them, right? But whether or not he's interested in exercising is not entirely the point. But he would not be holding them if he thought that the warrants were going to decline, depreciate in value, that GameStop is going to struggle to eclipse $32, $36, $40 per share within the next 10 months. Ryan Cohen would sell the warrants, but he has not sold the warrants. He's holding the warrants. Another huge takeaway from this 13D, amazing implications as it relates to the near-term trajectory of GameStop stock, even in Q1, Q2, but especially the 1-year trajectory of GameStop stock, and to me, a confirmation and a tip of the cap from Cohen that he very well is interested in purchasing, very well might be interested in purchasing with cash, not a cashless exercise or a cashless settlement, but very well might be interested in purchasing with cash this entire vesting period or this entire amount of shares, which of course is bullish if that's the case. If he's not interested in purchasing these in cash ultimately, and he does a cashless exercise, it's still certainly bullish that Ryan Cohen decided, even though he knows he's going to likely receive an increased concentration in GameStop shares, For him to say, hey, I have 171 million shares coming for me. I am good. I am set. Like that would be fine for him to say that, but instead he's saying, actually, I want to go ahead and buy another 500,000. If you want to interpret this 13D very pessimistically, there's nothing pessimistic about the fact that he's holding the warrants, but you could say that Ryan Cohen is just, he's only holding them for now as a gesture, and he only purchased these new 500,000 shares as a gesture, and all of it is to get approval for this comp plan. The problem with that thesis is that Ryan Cohen owns already almost $1 billion worth of GameStop exposure that he paid for, right? So that's a huge amount of his money that's on the line. The odds that Ryan Cohen is, let me just trick the public into thinking I believe in this company when 1 billion of his dollars have already been spent, and the entirety of this compensation is dependent on GameStop's public success, right? From a fundamental perspective and from a stock appreciation perspective, right? It's just not plausible, in my opinion, that Ryan Cohen's just singing the song, doing the dance to go ahead and get this approved, and then whoo, got it approved. Okay, I've got this in the bag. I'm set for life. He is not set for life. He has to 6x the stock net of the dilution, or 11x the stock in a raw sense from its current market cap to ultimately accomplish all of this uh, performance and receive the compensation. And that still doesn't speak to the $1 billion that he's already put on the line himself. All that to say, very excited about the 13D. Very excited to see what's going to happen in the next couple weeks and months, and really this calendar year. I think it's going to be finally a year that the GameStop story begins to materialize in a meaningful way. What do you guys think? Do you see it the same way? Do you see it differently? Would love to hear it. All right, that's all I got for you today. I will see you in the next one.